If you've ever used the traditional super trend, you know exactly how it works. When the market is clean, it appears to be perfect, but as soon as the price begins to consolidate, you'll encounter delayed entries constantly, false reversals, and signals that quickly fade after you enter. What most traders really want isn't to abandon super trend, but to understand the real momentum, know when the price is overextended, and identify worthwhile pullbacks. And that's exactly what the Chart Prime Super Trend Oscillator solves. The Super Trend Oscillator transforms the distance between the price and the super trend into a comprehensive oscillator adjusted for asset volatility. With this tool, you can precisely measure the strength of trends, pinpoint price extremes, and clearly identify exhaustion points. It works in any market and any time frame. The first thing we need is to be here on TradingView. I'm currently viewing the 5-minute chart for EU/RUSD, but as I mentioned, it's fully functional with any currency pair or asset and equally effective across all time frames. You'll need to navigate to the Indicators section and specifically search for the Super Trend Oscillator. Make sure to select the Chart Prime version. It's precisely this one right here. Simply click on it and it will materialize on your chart, exactly as you see it displayed online. On the main chart, you will observe a super trend band encompassing the price. Light yellowish tones signify an uptrend while reddish tones denote a downtrend. This allows you to see the trend and momentum directly on the candlesticks, without visual clutter. At the bottom we have the oscillator. Above the zero line there's buying pressure. Below the zero line, selling pressure. The farther from zero, the more extended the move is. At the very extremes there are distinct excess zones indicating when the price could be too far from the movement's average. This is where diamond exhaustion signals appear. At certain points they will show up. For instance, a diamond at the top suggests potential bullish exhaustion, at the bottom possible bearish exhaustion. These signals specifically emerge when the momentum makes a strong reversal from an extreme point. These are not isolated entry signals, but they function exceptionally well when combined with the overall market trend. You might be wondering how the indicator works internally. Its logic is quite straightforward. The indicator first calculates similarly to a classic ATR-based super trend, which reflects the current volatility of the market you're analyzing. It then measures the price's distance from this super trend, normalizes that distance using volatility, and ultimately smooths all this data into a comprehensive oscillator. This allows for a strong Forex move or a crypto move to be comparable, without you needing to guess magic numbers. I keep its default settings as they are, but if you click on them, you'll discover some rather interesting options. The higher the multiplier, the fewer signals it will give you. A cleaner trend, though also a slower one. I'm sure you're eager to know, how can I effectively incorporate this indicator into my daily trading activities? And now I'm going to tell you. But look, before we continue, a lot of people ask me which platform I use to access the Forex, stocks, and crypto markets. I personally use EXNESS because it offers remarkably fast execution, incredibly low and competitive fees, and a user-friendly panel. It's the platform that really suits, which works best for my analysis style and workflow. If you want to check it out, I've also left the link in the description. How do I do it? Go to Indicators, then input EMA. I'm going to take an exponential moving average and I'm going to apply it to my chart. I'll go into the settings here and adjust it to 300 periods for better visibility, making it clearer. I will also switch the color here to white, so it's much clearer to discern, and then slightly increase the line thickness. Perfect. With that done, I can confidently click OK, and now I've got the absolute ideal setup for precisely how I prefer to operate and make my trades. In an uptrend, I will require the chart to be operating above the exponential moving average of 300 periods. In this specific case, it is currently in effect. Additionally, I will require the price action to turn crimson on the super trend indicator display. You'll observe that the oscillator will settle at the bottom, and it's essential for it to reach an extreme point and then begin to display these small dots, which are precisely those diamond zones we previously demonstrated. Therefore, when it begins to exhibit this behavior, I will then await a reversal. This occurs exactly when the initial candlestick becomes visible right here, specifically when it shifts to a white color. In this specific instance, it was precisely on this very candlestick here you see that it began to transition to white. So at that specific moment it was coming out of an oversold state, however the overall trend was still clearly continuing its upward movement. With the chart remaining above the moving average, I'll then place my buy order precisely at the closing price of that candlestick. The stop loss is placed below the super trend zone, specifically here at 0.10%. Please observe that the price fluctuated upwards then downwards and very nearly reached our stop loss, which was positioned slightly lower at 0.10. It went for 0.08, and so right here we're going to place our stop loss. 0.20, which conveniently struck right here on these specific candlesticks, securing a truly fantastic take profit for the entire trade operation. For a downtrend, it's the same thing but the opposite. Now you'll want to see the price trading below the 300 period moving average. In this instance, the indicator changes to white, displaying a white fill, and it reaches at least one diamond zone. It precisely reached here, marking an extreme high during this particular downtrend period. When the indicator begins to turn red again, on the specific candlestick where this change occurs, as it did exactly on this one, we can then confidently place our entry for the market to continue its existing downtrend. Thus, we positioned our entry point at the candlestick close with our stop loss set just above the super trend area at 0.10%. Our take profit target was placed twice that distance below at 0.20, and the price indeed reached this level, resulting in a successful take profit on this downward move. And naturally, this strategy gains even greater strength when you confluence it with support and resistance levels, as well as zones from higher time frames and so forth. This is not a financial recommendation. Please backtest this strategy. Do your backtesting and adapt it to your own risk profile. This is a completely educational video and not a recommendation for buying and selling, and certainly not for indicator usage. If you enjoyed this video, please subscribe to the channel, activate the notifications, and comment more indicators to let me know you'd like more videos such as this one. Thank you, and I'll see you in the next lesson.